You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hi, Jim.
Boy, pretty wild ride for gold and silver over the last few days.
It really was. We went to bed Friday night kind of depressed and got up. If you got up Sunday night, went to bed late, you were still even more depressed. But then Monday, everything seemed to make a huge change, which could be a seminal event in the 4.5 years we've been dealing with lower gold and silver prices.
Do you think that we've reached a stage where we could say there's been a gold and silver capitulation spike?
I believe so, and I think that's a good way to phrase it. We won't know for certain right away, but the evidence and how things are dealt with in the next few days when the markets try to test those lows, how successful or unsuccessful they are, and also how the mining stocks respond, will tell us a great deal about it. But essentially what happened is that presumably on the idea of the failure of the Swiss vote over the weekend to require their central banks to hold more gold, the markets were sold down sharply overseas. Silver at one point I saw was down $1.50 an ounce, around $14.15 I think was the low print, and gold was down sharply. And this was in the overnight trading in Sunday night. And then Monday morning things started to change with short covering and massive volume and buying, and silver from being down $1.50 ended up closing over $1 on the upside at the end of the day. The volume was huge for gold and silver, and so this kind of a massive key reversal spike really gives powerful evidence that we've probably seen the lows for this bear market cycle, and that'll be reinforced if we see positive price action over the next few days and the next few weeks as we get through December. But I think assuming that the lows are in is a good way to bet, and then going out and looking for really good deals on the stocks that you want to hold is a good way to look at it, because I think we still have time as these prices back and fill in sometimes violent fashion to put a price out there that we'd like to get some stock on if it gets there, and you might be surprised. You might pick it up a lot lower than you expect.
Now, I've seen headlines now that say although commodity prices are down, they're not expecting a collapse. I mean, there's still strong demand for certain items.
Well, there are, especially zinc, probably the strongest metal. Zinc and palladium are the strongest metals in the metal sector. But it's people look at copper and they say, well, this indicates that we're going to go into a slowing cycle. But there's just so much going on. I don't think anyone can really look at it and actively sort out all the elements and how they relate to each other in terms of their importance. But we're looking mostly at gold and silver here, and they're moving on their own metrics to a certain extent. And I think if we keep an eye on that ball, that we've got a chance to do really well for people that want to either add to their positions if they have the cash to do so, or do some changing of those positions, or even adding some new ones on research that they've been conducting in their own efforts.
Is there any evidence that Chinese are still hoarding copper like they did a year ago?
Haven't seen much about that lately, but it wouldn't surprise me too much. I'm sure they're building their petroleum supplies, they're for emergencies and this type of thing, as we see oil under $70 a barrel. And there's several contrary indicators that make me think that we really ought to be paying attention to what happened Monday with gold and silver. I'd call them contrary indicators. The U.S. dollar has become the most overbought it's been in 14 years, and that's been weighing on the metals prices. We're still seeing massive buying of American silver and gold eagles and Canadian gold and silver maple leafs, and it looks like both of those estimated December volume will put both of them into the highest annual sales that they've had category. Continued withdrawals from the Shanghai Gold Exchange, UK wholesale silver warehouse withdrawals, and interestingly, the Central Fund of Canada trading at about a 13% discount to net asset value. And these things can tend to really bring strength to the market in a way that isn't immediately observable when you see all the volatility going around while the participants try to sort things out themselves.
The Canadian Mint is running a lot of TV ads pushing their $50 silver coin, and they say on the purchase, don't forget, there's no tax on it, and we ship it for free.
Yeah, they're becoming a real advertising force out there. I was looking at a picture of their, they're doing a 3-coin set over 3 years of wildlife of Canada, and this one this year was the howling wolf. Really beautiful. And it's a 5.9 coin. I believe, correct me if I'm wrong, but I believe it may be the only a coin or bullion, even a bullion round that's produced in the world today that has 5 nines to it. 99999 fine gold.
Wow, that is nice. Something to howl about.
I would say so. Good pun there, Jim.
Well, sometimes they're not so good. What about India? They've changed some of their gold regulations.
Well, India scrapped, and I think this was a big thing that really shocked and surprised the market over the weekend. They dropped the 80-20 rule, which means that had required businesses that were importing gold that they would have to take, and a lot of these are jewelry fabricators, they're supposed to take 20% of the gold that they import, fabricate it, and then sell it externally. And so this introduced complications and lowered their profit and all sorts of things with that. And the market wasn't thinking that that was going to be basically abolished by the Indian Central Bank, but that's what happened. And so I think India is going to be back in the driver's seat again, most likely this year, regaining its top spot as the largest importer of gold in the world, with China following closely behind. And so these are supportive to the price of gold and the question about availability going forward, because this 4-year bear market has just been devastating to the gold sector in terms of profitable production and in terms of being able to add new production and put out money for exploration. So all these things, I think, because of the systemic weaknesses that have been introduced into the supply pipeline, if demand continues the way we've seen it, I think you're going to see real upward pressure on the price of gold.
David, how big of a role is Russia playing in the supply of gold? I noticed the ruble is at a record low. Does this mean that gold out of Russia could be cheaper?
Well, I think they're playing a role in the demand for gold, because for the last several years, almost every month that they publish their central bank holdings of gold, it's increased. And I really don't believe that they're going to just be real interested in telling us exactly how much they're buying. I suspect it's considerably more, not to mention keeping all their own production in-house than what they've been letting on. So I think they're a bigger factor in the gold demand market than most people believe.
And China, of course, is continuing their big push for the last, I think, 3 years now of buying every piece of gold they can find. When is that going to be a factor in the price?
Well, someday they're going to make an announcement, perhaps, that they have a gold-backed currency, and that would be a real big shocker. But I think that the amount that they have accumulated is probably absolutely massive, much, much more than we believe. And at some point, that is all going to come together to have a crippling effect on the paper derivatives market, which have held the metals down well below where they should be for such a long time.
And perhaps we'll end the show with something that Dan Rather used to sign the news off with, courage.
Well, you know, this was an interesting quote. I read this from Jeff Clark's Big Gold Casey Research letter, to which I subscribed recently, and I thought it really says something about those of us who still believe not only that the struggle we've been through the last few years has been worth it, but if we stick with it, we will be rewarded, perhaps richly so, going forward over the next 2 or 3 years. And it's not going to take 2 or 3 years to reward us. It's just going to be, by the time you're out that far, I think you're going to be richly rewarded by being a contrarian and by doing it in a rational manner. And I'd like to read the direct quote that Jeff put in one of their most recent letters. He said, "The bottom line for today," and this was written a week or two ago, "the bottom line for today is that it will take courage to navigate our market over the next few months. However, we're confident that measured, bold action will be rewarded and encourage you to stay with your gold investments. A shift in sentiment will return to our sector. When it does, we will not only be made whole, but do phenomenally well. The opportunity for profit that's dead ahead could change our financial lives." And you know, Jim, I feel very comfortable with that statement. We all have to make our decisions about what we go for and believe, but I think Jeff is on the mark, and I'm willing to take those kind of what he calls bold, measured actions in hopes of being rewarded amply for my efforts.
David, thanks a lot for chatting with us.
You bet, Jim. It's been great talking with you today.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can check out online at silver-investor.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.